Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Vertex Pharmaceuticals Incorporated annual report. Vertex Pharmaceuticals Incorporated offers a range of transformative medicines for people with serious diseases. The company's product portfolio includes treatments for cystic fibrosis, CF, such as TRIKFTA/KAFTRIO, ALYFTRK, SYMDKO/SYMKVI, ORKMBI, and KALYDCO. These medications are designed to address the underlying cause of CF and improve the quality of life for patients. In addition to its CF treatments, Vertex is also developing medicines for other serious diseases, including sickle cell disease, SCD, with CASGVY, acute pain in adults with JOURNAVX, and type 1 diabetes with VX-264. The company's pipeline also includes treatments for myotonic dystrophy type 1 with VX-670, and autosomal dominant polycystic kidney disease with VX-407. Vertex sells its products to various customers, including specialty pharmacy and distributors, wholesalers, retail pharmacies, hospitals, and clinics. With a focus on specialty markets, the company aims to provide transformative medicines that improve the lives of people with serious diseases. The stock price of Vertex Pharmaceuticals Inc., VRTX, has experienced a slight increase over the past year, with varying reports indicating a range of 2.37% to 7.07%. Several key news events and positive developments have likely contributed to this upward movement. One major factor is the company's strong financial performance. In the fourth quarter of 2025, Vertex reported a 10% increase in total revenue, reaching $3.2 billion, and a 9% increase for the full year 2025, totaling $12 billion. The company also saw significant growth in non-GAAP net income and earnings per share. Analysts have shown positive sentiment towards VRTX, with multiple upgrades and increased price targets. This includes Barclays raising its target to $606 and RBC to $546. The company's pipeline advancements and new product launches have also been a major contributor to the stock price increase. The launch of Jurnavx, an oral pain inhibitor, is expected to drive significant growth in 2026. Casgevy, approved for 2 rare blood disorders, is also anticipated to make commercial progress in 2026. Vertex's renal pipeline expansion has shown promising results, with pavotadacept receiving breakthrough therapy designation from the FDA and an interim analysis of inaxaplin expected in 2026. The company's core cystic fibrosis franchise remains strong, with CF therapies delivering 7% global growth for the full year 2025. Looking ahead to 2026, Vertex anticipates robust revenue growth, projecting total revenue between $12.95 billion and $13.1 billion, representing an 8% to 9% increase. The company also expects significant regulatory progress for several of its treatments in 2026. Vertex Pharmaceuticals Incorporated market capitalization of $126 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Vertex Pharmaceuticals Incorporated holds a significant advantage in their industry. Vertex Pharmaceuticals Incorporated trades at a higher price-to-earnings ratio of 32 times and a higher price-to-book ratio of 6.69 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 27% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The net income of the company experienced a significant decline due to various factors. Initially, it decreased on page 31 due to restatement of previously reported data, potential additional financial and legal liability, and reduced revenue from affected products. This trend continued with another decrease on page 55, attributed to a $379 million intangible asset impairment charge. The profit margins also underwent changes during this period. On page 31, they decreased due to compulsory licenses issued for patents in certain countries and diversion of products into unauthorized channels. However, the effective tax rate showed a significant improvement from 315.5% in 2024 to 14.9% in 2025 on page 55. The reasons behind these changes are multifaceted. They include restatement of previously reported data, potential additional financial and legal liability, reduced revenue from affected products, compulsory licenses issued for patents, diversion of products into unauthorized channels, changes in tax laws and regulations, unfavorable resolution to tax positions, exposure to additional income tax liabilities, fluctuations in currency exchange rates and interest rates, inflationary pressures, intangible asset impairment charge, and effective tax rate decrease. The company's financial performance has shown significant improvement in terms of operating cash flow. In 2024, the company experienced a negative operating cash flow of $492.6 million. However, this trend reversed in 2025, with the company generating a substantial positive operating cash flow of $3.6 billion. This marked shift indicates that the company has successfully addressed its financial challenges and is now producing sufficient cash to support its operations. The performance of various segments and regions in the market has been analyzed based on extracted summaries. It appears that certain areas have excelled, while others have struggled to keep pace. In terms of standout performers, Asia has emerged as a strong contender, with mainland China, Hong Kong SAR, Macau SAR, Taiwan region, and Singapore all showing impressive results. Japan and South Korea also demonstrated notable success in the market. The U.S. market, within the North American region, performed well, indicating that there is still growth potential to be tapped. On the other hand, regions such as Europe, North America, excluding the U.S., and Latin America have been left out of the analysis or failed to provide relevant information. This suggests that these areas may require further investigation to determine their market performance. Management is optimistic about the company's outlook, highlighting several key milestones and strategies that will drive growth in the coming years. One major focus area is cystic fibrosis, CF, where the company expects significant revenue growth from its CF products, including ALYFTREK globally. Additionally, management plans to expand access to CASGVY for patients with sickle cell disease, SCD, and transfusion-dependent beta thalassemia, TDT, globally. The company is also making progress in other areas, such as its serial innovation approach for IgN and B-cell-mediated diseases. Management expects to complete the submission of BLA for povetacicept in IgN by the first half of 2026, with potential accelerated approval. Furthermore, the company plans to share interim analysis data from the povetacicept trial in the first half of 2026. In terms of strategy, management is focusing on indication expansion for AMKD and developing non-autologous islet cell therapies for type 1 diabetes, aiming for a functional cure. The company is also advancing next-generation CFTR modulators into the clinic and exploring genetic therapies to treat people with CF who cannot benefit from CFTR modulators. Overall, management's outlook suggests that the company is poised for significant growth in the coming years, driven by its strong pipeline of products and therapies in development. The company has a history of buying back its own shares. As of December 31, 2025, it had repurchased up to $618.5 million worth of shares. This is in line with its authorized share buyback program, which allows for the purchase of up to $4 billion worth of shares. The company has been actively participating in this program, making repurchases during the 3 months ended December 31, 2025. Concerns about inventory buildup and supply chain disruption are evident in the provided summary. On multiple pages, supply chain disruptions are highlighted as a significant issue, including manufacturing disruptions, general global supply chain disruptions, and distribution delays. These disruptions can be caused by internal manufacturing capabilities or supplier/partner issues. Furthermore, The reliance on third-party relationships is also mentioned as a potential concern, particularly in the context of Vertex's partnerships with Chinese biotechnology companies. Additionally, U.S. legislation limiting the use of certain equipment or services from these companies adds to the complexity and risk of supply chain disruptions. The issue of inventory buildup is specifically noted on page 56, where increased inventories are mentioned as a result of recent commercial launches. This suggests that while there may be concerns about supply chain disruption, there are also efforts being made to mitigate this risk through strategic inventory management. That concludes the financial summary for Vertex Pharmaceuticals Incorporated. Feel free to comment below, and I will be happy to answer them when possible.